so I'm considering moving to Thailand. I have been looking into it for not very long. I'm an Australian citizen, and I'm looking at moving to Thailand. Now, I have a company in Australia, so that makes things a little bit more complicated for me. So I was looking at the tax treaty with Thailand that Australia and Thailand have together. And one of the main reasons was because you'll see on YouTube a lot of this. Thailand's brought in a new rule as of 2024, 1st of Jan 2024. If you spend 180 days in Thailand, then they can tax the income that you bring into the country. So, like in a nutshell, if you're living there, they want to have the right to tax you, and like most people would say, that's fair enough. So anyway, there's a million different scenarios for a million different people. Everyone's got different situations, and with tax law and tax in general, and the two different countries, there's so many various factors. I'm just giving some examples that like could apply to me, and I'm not an accountant. You should not take my advice. I'm not giving you advice. I'm just showing you what I've been looking at, and I'm just putting it up because it might help you. It's absolutely worth doing your research before you make a decision like that, to pack up and go somewhere. So yeah, have a look and see what you think. But just remember that you do your own advice. And like, I am going to speak to an accountant as soon as I get there. I've spoken to my accountant here. I've spoken to the ATO. The ATO have said in my situation, I would be considered an Australian tax resident. Most likely, there's a lot of grey area. With the ATO, it's self-declared, so it's self-assessed. Sorry, so you have to assess that yourself with the ATO. Obviously, each country will want your tax dollars, so that's probably where it's self-assessed, I guess. But anyway, have a look at the video, and I'm not going to say like and subscribe or any of that stuff. Just watch it, and if you've got a comment, and I'll try and answer it. But speak to your accountant. Just watch the video. All right, guys. So I'm just talking about double tax agreements, specifically Australia and Thailand. I have seen so many videos on YouTube where people are they're probably just trying to create clickbaity titles and scare people into viewing their video. But I don't see a massive problem here for most people. However, I'm not an accountant, and I'm not even qualified to give any financial advice, and I'm not telling you what to do. I'm just showing you what I've come across so that maybe it can help you in your research, make your decision. So yeah, like I said, I see a lot of people saying, oh, this is the end for expats and all this stuff in Thailand. I just don't think it's a massive deal. So I have not done a lot of research either, so maybe you just don't even want to listen to me at all. But double taxation agreements are actually there from what I see, they're there to make sure that you don't get taxed twice, okay? So these are a good thing in my eyes, okay? So if you come from one country and then you go and live in another and they're going to ask for tax, well, it's likely that your home country or your country that you are a tax resident will give you tax credits for that company, for that the country you reside in, so that you don't have to pay taxes there. Now, with taxes, there's many different cases. There's many different scenarios, and not a lot is in black and white. There's a lot of grey area. So everyone's case is different. There's a lot of moving parts. So anyway, what I did, I put this now. The Australian, I checked. This is the latest one as far as I could find. 1989 by Mr. Paul Keating, I think, signed off on this. The Australian tax treaty with Thailand. So I put this into ChatGPT. Now, let's give a little disclaimer on ChatGPT as well. ChatGPT will just make things up if it wants to. So let's not take this as golden, but I just put it in there and asked it some questions. Now, this is certainly not something to build your tax strategy off. Like, you need to speak to a professional. You need to speak to an accountant. And that's exactly what I'm doing. But I just wanted to get some background info because I saw so many negative videos out there. All right. So I'll start just reeling through some of the interesting points. Okay, so I asked a question: if I'm living in Thailand but still a tax resident of Australia, and if I paid tax on my taxable income in Australia, would my taxable income in Thailand be considered the same amount as the taxable income in Australia? Okay, so in Australia, I've made X amount of profit with my company and I had to pay X amount of tax because I had these deductions and yada, yada, yada. In Thailand, it may not be considered, the deductions I claim in Australia may not be the same in Thailand. So I may have a different amount of tax to pay. So I can see that as a scenario, a potential scenario where maybe I owed a bit more tax in Thailand. So it does say some of the reasons. So you guys can read through those if you want. But like, it is ChatGPT, but it has brought up, valid points. If you just read the headings, like different definitions in tax laws, that's, different currency fluctuations, tax treatments of specific income types. So there are varying factors, deductions and allowances, like I just spoke about, residency and source-based taxation. So I think, like, it's a pretty good statement here. The tax treaty between Australia and Thailand aims to alleviate double taxation and clarify tax obligations, but it does not necessarily synchronize the tax bases of the two countries. So you could have two different numbers of tax that you had to pay, whereas you paid less in Australia, which is pretty unlikely, I'd say. And you then had the tax credits applied to Thailand, but they weren't enough, so you still had to pay some tax in Thailand. My gut tells me that Australia would be taxed much higher than Thailand. For a company I'm talking about, this all applies to personal tax as well. I even asked it if Australia has a higher tax rate in this scenario of me living in Thailand yet making my money from an Australian company I own, not doing any business in Thailand but working from my computer while living in Thailand, would you say it would be unlikely I would have to pay any additional tax than I usually pay in Australia? So it says, if in your described scenario where you live in Thailand but earn income from an Australian company you own, and where the business activities are not conducted in Thailand but entirely from Australia, the taxation implications would typically be as follows under the Australia-Thailand Tax Treaty and General Tax Principles. What I'm looking at is the entirely in Australia part, right? So yeah, taxation in Australia. So since the income is derived from an Australian source, so like we've got Australian clients, etc., whatever, your Australian company, Australia has right to tax the income. This one too, being a tax resident of Australia, you are subject to Australian tax on your worldwide income. So last time I checked, there's 3 countries in the world that do that. They will tax you anywhere you live in the world. Australia is one of them. The US is another, and then some other country that I can't remember. But it's not the UK. It's not. I don't think it's a westernized country. Including the income you earn from your Australian company, right? So Australia's gonna tax us as an Australian tax resident. They're going to tax us wherever we are. So like I'd say, you'd have to like give up your passport to get away from that and say I'm not Australian anymore, which that's a pretty big deal. Say like the primary consideration here of the source of income and where the business is effectively managed, right? So if you're living in Thailand but you're not managing the business, you're not performing business activities, then that would be now like ChatGPT tells us that would be an Australian business. Okay, so I know what you're thinking. What if the business was managed from Thailand, however, only online, no physical location? Well, ChatGPT says that this would take into consideration permanent establishment, PE. So under many tax treaties, including the one between Australia and Thailand, a PE generally refers to a fixed place of business through which the business of an enterprise is wholly or partly carried on. Okay, so however, the definition also extends to places of management and situations where substantial equipment is used or where management activities are carried out through a fixed location. Managing the business from Thailand, even if online, could potentially be viewed as creating a PE in Thailand, depending on the nature of the activities and of their significance to the business operations. So I think like ChatGPT is telling us if the business was managed from Thailand, then they may be able to show that some PE exists, and that might give some. Well, it actually talks about that tax liability in Thailand. Should Thailand consider that a PE exists or any of the businesses managed from Thailand, it may assert the right to tax the profits attributed to the activities conducted in Thailand. So I suppose they would work that out, and there potentially could be an element, if it was managed in Thailand, there could be an element to that business that is taxable. Look, all of this. So it does go on to say applications of the tax treaty in regards to this. So it does say that according to the treaty, if a PE is established in one country, the profits attributable to the PE can be taxed in that country. So the profits that PE is attributed to. So like what profits are attributable to that PE? Like it's pretty tough to answer. But see, grey area. But yeah, so yeah, but it just says like Thailand may have a case to tax the business first, I guess. You could call it that if it's like managed there, but I suppose yeah, like there is stuff out there on like double tax agreements, and it's really like, you know, like every tax situation, you go to an accountant and you get them to guide you on this stuff. What this is just a bit of preliminary background information for people who might be looking into this, because when I was looking at Thailand's 180-day rule, and all I could find was a bunch of people trying to make videos that were clickbaity and they were just trying to say, "Oh, it's over for the expats," and getting people to click and watch their videos. But there wasn't any really anyone really looking into like what's some of the outcomes here. So, in a nutshell, I don't see this as a really bad thing. I don't see it. I just see it as Thailand getting their act together um, with taxing people a bit. Now, people might slam me for that, but I just see Thailand sort of progressing a bit with their taxes and trying to charge people for bringing in that, just trying to improve things for themselves. So, yeah. Anyway, I'll leave it at that.